All right, guys. So we'll see what this brings here. So anytime we're trading around the big events, right? We want to think smaller size over a what? Smaller size over a wider range of the chart, right?
The global economy is actually doing okay. The question is if there's any coordination, and my best guess is that there's actually very little coordination among central banks. It doesn't really matter too much from the Fed what's going on around the world, other than if it has an impact on the dollar. And given the dollar has been moving sideways, we don't really see that as a major input as such to the Fed decision making today or going forward.
All right, I just need to ask you very quickly as well about the BOE, because the BOE meeting's on Thursday, and of course we've got some disappointing wage data out of the UK as well.
Nice sales guys this morning on Euro sold the high, right?
The rest of the world may not be, or the developed world at least. What does that
Took profit right into the high.
Absolutely. The key issue really here is that there's quite divergent developments on the inflation front in the US, including data.
So it really matters where we close today. We can get some noise here in the next 30 minutes.
They should just say that, well, the inflation data is not strong.
I mean, Treasury's already had a big move.
The Fed decision 3 minutes away, folks, is the idea of investment within your research
Huge move.
report. It's stunning the lack of investment still in this nation. Is it because the fixed income market of Ira Jersey is so messed up that we can't have investment because nobody knows what rate structure to use?
Well, a very simple explanation to why we don't have much investment is that we're still full capacity. It's taken so long time to crawl out of the hole after the financial crisis that we still have excess capacity in the economy. So we don't need to do capex as such, and the tech sector is obviously doing well, but that's not because we have dramatic increases in capex.
And what's important here is there's too much capacity of service sector. Is retail part of Chair Yellen's challenge, the bricks and mortar challenge that we see every day?
I think that's very important. For inflation, this is absolutely critical because goods inflation only makes up a third.
I don't know what the level is in yield, guys, but we basically can move off the highs and treasuries all the way down to the low. Halfway is right back here. I think that's probably close to 2%.
Also, as I think about the inflation outlook.
Ira Jersey, do we or Chair Yellen know where the risk-free rate is? I don't believe I do.
Well, everyone, we think we know, right? We always try to do it. We have our models that try and figure out where the natural non-accelerating rate of unemployment is going to be and all of that. But it's never obvious, kind of ex ante where that rate is or should be. Now, the Fed seems to think it's 3%, right? We showed the
she's like, 12 rate increases.
That's what we showed the dots for.
And if the Fed doesn't hike, the gold should go even higher.
Will they get there? Probably
The
not.
market's totally expecting it coming into today.
And one of the things that this shows is we've undone everything that was seen as inflationary since Donald Trump.
Still a little bit long here.
Right? This actually took a negative inflation trend that we got this morning in order for
Is it out?
expectations in the longer term to get back to where they were just 7 months ago.
Only because we can do it 1 minute away. Let's bring up the five-year break even because we can do it on Bloomberg. Here's a chart.
What's Bloomberg doing?
Discussion is all you got to know is normal massive disinflation and a big recent roll.
Yes, it's been a very recent roller since the Great Recession, and you now see it went back up on optimism that Donald Trump's policies were going to prop up the economy, and now it's fallen right back down.
All right, as we look ahead to the actual decision, which is coming out in about 30 seconds, let's get you a quick data.
Wow, this is way behind. All right, so let's let the euro settle in. So they hiked, which was what Fed Fund Futures has been saying all week. Dot plot's unchanged. So it sounds like a dovish hike. All right, so far decent wall on the euro here. The euro cable hasn't done much. Sterling's still back about halfway. I think a couple of you faded this 4-hour move up here. That's fine. Twos came off a little bit. Twos are off. Tens aren't coming off, just the front end. I may sell some more tens up here. I don't really like the daily cycle. Euro back up. Are you guys doing anything here? Dollar yen back to 109 after getting just smoked this morning. Calling the Aussie CAD. So this is what we talked about this morning on dollar yen, right, guys? Phase one, lower low. Look how weak this bounces, and then all you do is make a lower low. So even though you're really oversold here, if you buy, you get zero bounce just to go to a new low, right? This was a little bit better. This is phase two. This is phase one. I'd rather short up in this area. More pressure for the euro. Seems kind of choppy to me calling that chart, you know? Up, down, up, down, up. I mean, seems to like to bounce off a par. But you are back halfway. It's just a choppy chart though. See if Kiwi reversed so strong this morning. Not really. Did you guys get covered up on these into the new lows here. We want to cover into new lows that we had on short from this morning. What I'm thinking here, guys, on treasuries, I may, let's see what fives are doing. I may buy some fives and sell tens and then work the position. So the thinking is on the way up in fives, way up, you're overbought. So it took profit. That's a terrible arrow, right? But now we've gone from here to here. I'll buy fives. And then on the next bounce, I'll short tens. And I'm already short a decent amount of tens already. So if this just keeps coming lower, I'll probably cover a few tens, maybe buy a few more fives, and then on the next bounce, reshort tens. And so on the dips, I'm buying fives. And when it rips like this, coming out of the fives, selling the tens, cover tens, reshort tens on the bounce. So I'll rebuy some fives here. And if we bounce, take profit on the fives, and then I'll short tens on the next bounce. If I buy a few fives here and it comes down, I'm more short tens. You can see I'm out of the money down here. Then I'll actually cover the tens, some of the tens, and then reshort the next bounce in tens. That's how you work both sides. Does that make sense to anybody? It's kind of trading around, trading the yield curve, basically trading a steepener. Let's see what the Nasdaq's doing now. I didn't announce anything, Colin. I'm just was seeing who's interested in focusing more on trading treasuries and bonds. I mean, it's the market I traded all day and all night for many years. So it's a market I get really well. But I wasn't sure how many of you guys are trading futures. mean, some of you have some experience trading long bonds. I don't. There's a lot you can learn on the fixed income side. So I was just seeing who would be interested. Just trying to kick it around that idea. Mike, you are? Okay. All right, come on. Well, guys, I kind of want to get involved and have more to do here. I don't really see it in FX. I'm wondering if this is buy the rumor, sell the news, and maybe this was dollar wants to sell off into the rate hike, and then from here, I mean, inflation's already rolled over a lot, so I know the Fed's worried about it, and that CPI print was pretty bad. But here, let me show you guys what this is from Hedge Eye this morning. This is what inflation's been doing, but the reason that energy's really struggled this year and commodities have kind of rolled over is because inflation in year-over-year terms already peaked. So inflation has a good chance of continuing to do this. This is part of why bond yields have been coming down, as the inflation expectations. I mean, bonds hate inflation. Bonds hate bond yields. If growth is accelerating and you have inflation, bond prices go down, the yields really rip. So that hasn't happened where you've had inflation coming down. So that's part of why bond yields have been going lower. But this was the peak in the first quarter. And so on the CPI print, I mean, it's year-over-year basis, there's a lot more room to fall. I mean, here you can see this red bars. This is Bloomberg consensus. They think inflation and CPI will stay up here. But the lower oil goes, the lower the commodity index goes. You know, Hedge Eye does a much better job with their estimates. They got CPI here in 2018 all the way down to 108. But the thing, guys, with growth accelerating and real inflation going down, it's more buying power. So there's a deflator in that GDP calculation. So real GDP is going to be accelerating more as inflation comes down. So that's actually really good for growth. That's why stocks are on all-time highs. I'll share this chart real quick too. Dan, you're interested? Okay. Can you guys see this chart? Don't listen to everybody that keeps talking about stocks are expensive, valuation, blah, blah, blah. That's just hogwash. You can draw a line right through the middle here of the mean. I mean, stocks have been much higher on a PE or some whatever value metric you want to look at, trailing month PE. I mean, we've had much higher PEs. We're at like 22 now. The market's not expensive. It doesn't mean it can't keep getting more expensive either. I mean, still want to stay bullish stocks for sure. All right, so in treasuries, rebought the fives. Actually, I took profit on. And you'll say, well, it's like the same price, Jason. What you're buying them at the same price that you sold them at? And the answer is yeah, because you have to take into account from where they came from. This was really overbought. this was even more overbought, and now we pulled back. So, you know, probably could have sold a couple tens up here and covered some of those. But where price comes from matters, and over what amount of time. So I'm going to buy more fives into this dip, cover tens on this next push down. It's kind of a weird echo in here. Twos are coming off. What's oil doing? Nice profit take, guys, in gold. Kind of tempted to maybe try a scalp long here if I really wanted to day trade this, buy this dip. But I'm just going to play conservative. Maybe on the next push lower, I'll rebuy some calls. Just go slow. So far, we rejected 113 on Euro. Pretty meaningful. $15-minute cycles back down, 30-minute slow. We're just kind of in no man's land, guys, here on Euro. You nibbled on a little, Dan? All right. Since we broke the bands here, I'm kind of thinking we're going to test pi down here. What is that? 112.23. Tempted to buy gold here. I'm just going to wait. Took profit pretty well. Just one more push down and I'll care. Man, ultras are still a bit. It's a nice move there today, huh? 3 points. Just a beast. All right, what are stocks doing? You're still short cable, Colin? All right, me too. NASDAQ likes this like 50-60 range up to 75-80. So Dan, on your euro, you may want to take some off into the highs here if you test the upper bands. This is going to be tough to get above, and then you got pi in the 200 up here. Look at oil, new lows. Good night. So that's part of guys' reflation's rollover the last 3 or 4 months, all the same trade. That's why energy's been really lagging. If you look at the sector performance, energy's been terrible. Look at this. This chart goes straight down. And then real growth, high beta, straight up. And even natural gas, pretty weak. You're getting bullish? Yeah, I don't know. I mean, the intermediate term is still in an uptrend. I don't know. The fact that we failed at 113 though today. Yeah, it is. You're just sitting right underneath that major Trump high at 113. If we close above 113, I'll be more confident that you can go higher, like 114, 115. That daily cycle is up though. I agree. It is up. I mean, I want more of a rally in euro pound to fade that one again. It just, it's 4 hours still coming up. put the signals on the chart, see what it looks like. And we covered pretty well. Could have covered some more in London. Probably should have refaded it up here this morning. Dollar Swissy coming up strong. That's better. It's trying, guys. I mean, Dollar Swissy got a higher low finally. This is the pivot. This is the intermediate term pivot for sure, right here. If we get above here, if that's the case, you're not going to see euro above 113. I'm still core long there, Dollar Swissy, out of the money. I mean, I'll get more aggressive if we can start to turn the corner. Thinking maybe I'll short some ultras if we can get up towards the top of the bands. We rolled through the 8 here, shows you the downtrend. What pair there, Dan? On the euro? Euro USD. Let's see. What time frame? This one? Four hour. It doesn't really stand out. Just kind of want to look to the left and eyeball compare it relative to the most recent candle. So, I mean, yeah, it was pretty solid. Yeah, I mean, I would say yes. And these are the biggest candles on the chart. Then you have the bearish ones too. So the way I would look at that, Dan, is hold on a second. I'm still short, guys, for dollar peso, and I'm going to cover a little bit. I'm going to cover a little bit. Just noticing it drop. So Dan, on the euro, so you can say, look, okay, I've identified that this is a bullish candle here, right? This is showing the power. I don't disagree at all. I mean, you made higher lows. You took out these lower highs here. You have an ascending triangle, and then boom. But it's all relative. This 113 is a big picture resistance level. So it depends how you play it. I mean, you can stay long here on the intermediate term. Your risk is below this low for sure. If this real money candle can't hold and experience follow through, the more you take that wall down, you actually end up having what? A bearish engulfing reversal type situation, right? So you may hold here and we may grind back up to 113. Your risk is below here for sure. Below 112. If you can't hold that, then you're going to go back to the 200. You're going to test these lows. But I flipped and went short here on dollar peso. And I'm going to cover some now. This is a pretty good drop, right, guys? Here's your real money candle. Take out the lows. 1, 2, 3, 4, 5, 6, 7, 8 days down. I'm not going to take it all off. I'm just covering a piece. Right back down. It's a little bit of a crossroads on the euro. You have a big picture level. You have an intermediate term uptrend. You know, basically you have a big picture level, 113. And you have an uptrend that's had a good run. And you're coming right into the underside of, are you going to turn or are you going to break out? Well, it depends how you want to play it. I mean, you have a daily cycle that's up, and then you have a weekly cycle that's rolling over. So those two cycles are crossing also. Nice failure in cable. You can get a little bit back here, guys, if you're short. Yeah, I gotta signal this here. Charts move a lot slower when streaming. It's painful. All right. Did you cover some coin on your cable there? Guys, if you're joining us on the stream, YouTube, make sure you subscribe so then you can get the alerts next time we jump on, whether that's in the morning or try to do more of this in the afternoons. Not yet? Okay. I didn't cover any either. It's too small for me to care. Yeah. No, I'm good with that. I hear you. So sure enough, on the euro, you break the bands, you follow the pie. That's why I said just going to entertain a long. It would have been closer to here. So for those of you that are new, right, in the model, when you break the bands, the TMS, get the bigger pullback, bigger pullback back towards the 200 or back towards pi, typically. It doesn't matter the time frame. Machine is so slow. Too much stuff. I'm not sure how much more movement we'll get. Euro and gold trade pretty much identical here. You know, gold filled guys right at the underside of the 30. So this is going to get interesting too. This is a 30 halt. Do you guys know what a 30 halt is? I probably need to explain it for somebody that are new, right? So 30 halt looks like this. And you have a turn in the market, so you follow this 8. Well, this is the 8. 30's down here. Sorry, this is the 8. Same concept though. So markets in this intermediate term uptrend, breaks through it right here, breaks through it, comes down. You break the 8. Here. So you break the 8 here. Then you hold the 30. Well, not quite the 30. You held pi down here. Right? So you come through, bounce, and then you catch the underside of that average. The average halts the price action. So we might fall now back towards here. You can probably see that on different time frame. And you come through the 200, cycle down, you come back up, and then you fail up there at it. Anyway, that's why I was taking profit this morning in here. So anyway, guys, on Euro again, this is the big picture level up here at 113. That's kind of a place where you have the long-term downtrend coming in. And then you have this intermediate term uptrend. So this is clearly the pivot right here. If you break this low, you can go to here and or all the way back down here to pi. So we're stuck in this box right here. Taking off, bud?
Yeah, gotta get my other
What, Dan, on which pair? Yeah, I mean, it can. I mean, just as often as you get a breakout, you get failures, you know. Guys, I just think on the euro, it's tough you don't want to paint in your mind a breakout before you get through 113. Like, could it go to 114? Yeah, but the point is you got to get through 113 first. So, I mean, I liked being long here when we got through the French election highs because there's more room to run before you run into 113. Trying to get too bullish here, I mean, you have a small amount of upside and you have all this downside. Versus here, this was more room to be long and play for the move into 113. Now, I kind of would rather at least, even if you get through 113, you got 114, 115. Those are all big picture areas that I want to be short from. But I mean, you can pick your spots. Like today, we were long on the 5-minute and the 15-minute, and then took profit into 113. You could have shorted small up there, and then be covering right now, or looking to add if we break these lows. The TMS is right here, 111. If you don't hold here at 111, then we're going to probably fall back to pi. But just different time frames. This was in an up move. Now we're in a down move. For the near term, right? And you guys just go look at the direction of your 8. Your direction of your 8 on the 15-minute. So it's rising. Whoop. It's rising the whole time on the way up here. And then now look to the direction of it. It's quite the round trip today on the euro. All right, guys, so I think I'm going to try to wrap a couple things up here. Good sessions today. I mean, I'm just tiny core short euro, and I'm not really in a hurry to add to it. I mean, just 100% retrace of the move today. If it was in the morning, I'd be taking a long here and then seeing if we turn up with the cycle. But for me, I'm going to get bearish if we break the TMS on the 4-hour, and I'll probably get more aggressive on the short side of the euro. And maybe start to add $1 Swissy if that starts to turn the corner. I don't know. We'll see. Had some pretty good moves in treasuries today. I mean, the game plan there is pretty simple. The next dip lower, like right now, I'm gonna cover a few tens on this. Should have sold more here. I just didn't want to do it right in front of Fed decision. If we sold some more tens here would have been great, and they could have covered right now. But guys, look here real quick on treasuries. This is a good example. Even though price is basically at the same place that I sold, I'm still going to buy these back because it matters where market came from and the time that elapsed. Ideally, I should have sold some more up here. Then I would be covering, taking advantage of that. But I want to cover some here because there's a chance that we can bounce back. And then I can re-short tens. And you know, if I'm short 6, I just cover a little here. And if we come back towards my average, you know, it's no big deal. But when you go from here to here, the right action is to buy some back. Because if you would have been short up here, you would be buying back from here for sure, right? So when I buy a few tens back now, I know the next bounce, I'm going to re-short tens. If they come back more, I'll be back close to break even, no big deal. And I'll probably buy a few more 5s on the next push lower. And then I just keep working my averages, taking advantage of the ebb and flow. All right, guys. Well, for those of you in YouTube land, subscribe to the channel. We'll be doing a lot more of this. For those of you on the team, good stuff today. Send me your trades, and then we'll be on early. You know, it's Bank of England in the morning, so we should have some more movement in Forex for sure. But I'll keep you guys posted in the room as always. You're out, Colin? All right. All right, guys. Enjoy the rest of your evening. I'll talk to you in the morning. All right, Dan. Later. I'll leave the room open. I'll just end the live stream if you guys want to hang out.